Webull stock closed Friday at $8.29, up 0.04, or roughly 0.5%. What made the session genuinely interesting was not the small move in the green, but the behavior in the middle of the day. Webull dipped below the $8 level early on, traded in the $7 range for a moment, and then rallied back above $8. That price action tells us something important. It suggests that, at least right now, $8 is acting as a psychological and technical floor. Buyers were willing to step in. Selling pressure did not accelerate once the price dipped below 8. Instead, the stock reclaimed that level and held it into the close. For a stock trading near its 52-week low, that is not nothing. In a market where sentiment toward fintech and retail trading platforms has been mixed, that kind of reaction is worth paying attention to. So the question becomes, what is actually going on with Webull right now? And what does this bounce above $8 really mean as we head into the weekend? On paper, Webull is coming off a strong quarter. The company delivered revenue growth of more than 50% year-over-year, driven by higher trading activity and increased customer engagement. Earnings came in ahead of expectations. Customer assets have grown significantly, which is a positive indicator for a platform that relies on transaction-based revenue and user activity. These are not the financial results of a stagnant company. They look more like the financial results of a business that is scaling, adjusting its product offerings, and continuing to attract a growing user base. Even with that backdrop, the stock has been under pressure. That tells us the issue is not necessarily company-specific. The pressure seems to come from macro conditions and sentiment around retail participation in markets more broadly. Retail trading activity has not been dead, but it has been inconsistent. Periods of enthusiasm are followed by stretches of caution. That means platforms like Webull experience waves of strong engagement followed by quieter periods. You can see how this affects both revenue predictability and investor confidence. So while the company posts strong growth numbers, the market is still trying to understand how sustainable these trends are. In other words, investors recognize the growth, but they are not yet prepared to price the stock as a high-confidence growth story. Another major factor weighing on Webull is valuation uncertainty. Analysts have trimmed price targets even while keeping buy ratings. That is usually a sign that the analysts still believe in the long-term potential but have concerns about the near-term environment. When price targets drop, investor psychology shifts. A lowered target signals that the road ahead may be choppier or slower than expected. And when you overlay that with a shaky market environment, you get a subdued stock price, even when the business fundamentals look reasonably solid. This is where the $8 level becomes more important. Stocks often reveal the truth about investor psychology long before they reveal the truth about the underlying business. When a stock approaches a major support level and buyers appear, that tells us there is at least a base layer of confidence. It does not mean the stock is guaranteed to move higher, but it does indicate that a meaningful portion of the market views the current valuation as cheap, or at least fair. If Webull had broken below $8 and kept falling, it would suggest the opposite. It would mean that even with good earnings and expanding customer activity, investors still believe the stock has further room to decline. But that is not what happened on Friday. Instead, the stock pulled itself back above the threshold. It found support. The next question is whether this support level is just a short-lived bounce, or whether it can serve as a foundation for a larger recovery. The answer depends on a few catalysts. First, we need to watch trading volumes. If users on the platform increase activity, especially as broader markets start stabilizing toward the end of the year, Webull's transaction revenue can rise sharply. Second, the company has been expanding into new product areas, including fixed income offerings and deeper crypto integrations. These have the potential to diversify revenue and reduce dependence on traditional trading volume. Third, macro conditions will matter. If markets become more volatile, retail activity tends to increase, which benefits Webull. If markets become flat and uneventful, retail activity may shrink, which puts pressure on the top line. Technically, the stock now sits in an interesting place. The $8 mark is clearly a battleground price. If the stock can build a pattern of higher lows above that level, it becomes a springboard for a potential move toward $9, then $10, and eventually toward the analyst targets in the low to mid-teens. But if the stock fails to hold $8 on its next test, the risk is a slide into the mid to high sixes. That is the typical scenario when a stock breaks a major floor after multiple tests. Buyers give up, sellers take control, and the next support level becomes the focus. From a sentiment perspective, Webull still has a narrative problem. The company is positioned as a modern trading platform, but the online brokerage space is extremely competitive. Unlike early 2020 and 2021, Webull is not riding the tailwind of a brand new retail boom. Retail trading is much more cautious today. People are not blindly piling into momentum names or trying to call the next meme stock. They are more selective. That means Webull's growth must come from product quality, user satisfaction, and platform innovation, rather than sheer market madness. The good news is that the company seems to be doing that. The challenge is that the market has not yet rewarded it for those efforts. This brings us to the question of what would make a good weekend video angle. The most compelling narrative seems to be the $8 floor. The idea that the stock dipped under 8 and then reclaimed it makes for a strong story. Investors love to watch stocks that hold key levels. They want to know whether the floor is strong enough to support a rebound, or whether it is temporary before a bigger breakdown. So the angle becomes, is Webull stabilizing at $8? And if so, could this be the moment when the stock starts building a base for a recovery? Or, alternatively, is this just a brief bounce before the stock breaks down even further? Another compelling angle is the disconnect between fundamentals and price. Viewers respond well to the question of why a company that just posted strong revenue and earnings growth is still sitting near its 52-week low. It creates a sense of curiosity. It also allows you to create tension. The market is saying one thing, while the financial results are saying another. Which one is telling the truth? That type of narrative creates engagement because it invites viewers to think independently rather than simply accepting price action at face value. There is also a larger story you can tap into. Webull represents a shift in the brokerage world. Platforms are no longer defined only by low-cost trades. They are defined by user experience, community, product diversity, and mobile-first design. In that sense, Webull is similar to how Fintech companies in other sectors have disrupted legacy financial institutions. That backdrop helps contextualize the stock's potential. It also helps remind viewers that while the stock price fluctuates, the broader mission of the company is long-term and structural. Whatever angle you choose, the key message is that Webull finds itself at an inflection point. The company has evidence of strong growth. The market has not yet rewarded that growth. The stock is hovering at a key price level. And the next few weeks will determine whether Webull starts building a base for recovery or slips into a deeper downtrend. $8 is the line that will tell the story. If it holds, sentiment could shift. If it breaks, the stock may need more time before the next real rally begins. As we move into the weekend, the big story is simple. Webull's bounce back above $8 is a small but meaningful show of strength. It does not guarantee anything, but it does suggest that investors are watching this level closely. The coming sessions will reveal whether this support becomes the foundation for recovery or a temporary pause before more volatility. For now, the $8 mark is the most important level on the chart. And Friday's action suggests that the market is not ready to give it up just yet.